The lack of bad news sustained positive sentiment on Wall Street. The session today is going to be volatile. The purchase deal on the Silicon Valley Bank reassured investors and revived the risk-on mood. The technology sector in the S&P 500 remains under pressure. As a result, the benchmark indexes closed mixed yesterday. And that's all for today. We keep monitoring the financial market situation. Subscribe to the channel and good luck in your trading. Beware of a high volatility today and see you online tomorrow. The Dow Jones rose by 194 points or 0.6%. The Nasdaq dropped by 0.47% or 55 points, and the S&P inched up by a modest 0.16% to close at 3,977. The major stock indexes traded sluggishly with a mixed dynamics in the New York pre-market. The S&P is expected to trade in the corridor between 3,870 and 4,040 points. The banking sub-index of the S&P and the regional banking index opened the week 3.1% and 0.6% up respectively. Shares of the leading US banks rebounded by 2.9 and 5%, having looked the strongest performance among the S&P 500 stocks. Shares of a First Republican surged by more than 50% yesterday after the company announced its purchase of deposits and loans of a Silicon Valley bank. Besides, shares of a First Republic bank jumped by nearly 11.8% after Bloomberg reported that the U.S. authorities pondered over the scenario of extra aid and balance. The bullish high-tech stocks were wind down, so the Nasdaq closed in the red. Fast-growing high-tech giants completed a strong quarter, hence the decline could be triggered by profit-taking. Walt Disney shares grew by 1.6% after the company fired 7,000 employees. Futures on the US stock indexes traded lower in the pre-market. Yields of the US Treasury spiked as investors eased fears about a crisis in the banking sector. Yields of a benchmark 10-year Treasuries climbed to 3.52%, whereas yields of a 2-year Treasuries rose by 7 basis points to 4.03%. Such moves put pressure on the bullish stocks such as Apple, Meta, and Alphabet, which shed 0.3 and 0.6% before the opening bell. Shares of a large and regional US banks grew modestly by 0.3 and 1.2% in the pre-market after the stunning recovery. Wall Street is trading mainly flat for a while ahead of a speech by the Fed Vice Chair for Supervision Michael Barr in front of the Senate Banking Committee. The regulators pledged to revise their rules and procedures, but they insisted on sustainability of the financial system. From the report by Michael Barr, lawmakers will find out what exactly went wrong and will push ahead with the solutions. Before the hearing, Fed's policymakers and the FDIC confirmed that the funds of depositors are safe. Both regulators said that they are investigating the culprit of the crash of the two banks. They are also pondering over amendments of the current rules so that the independence are prevented in the future. Member of the Board of Governors Philip Jefferson said yesterday that the stress among small banks could be the most painful for small businesses. Deputy Treasury Secretary Nellie Long should state in the Congress today that the government is going to stem the contagion in the banking sector and ensure the safety of deposits of common Americans. Extreme volatility on Wall Street forced investors to close positions and pushed others to benefit from sharp price moves. They foresee the quiet market soon. It means that the relief rally is based on the technical factors. At the end of the month after Easter, investors will decide whether the recovery of the bottled bank stocks and risky assets happened because the market regained trust. The jitters in the banking sector obscured the agenda of a monetary policy. Even though inflation is gradually easing, investors are puzzled about the further policy moves. Now, central banks have to strike a balance between the goals of a price stability and smooth market operation. As for the corporate news, Lyft shares rose by 4% in the pre-market after the company hired former Amazon CEO David Reassured as a new leader. Investors are also monitoring revenues of Micron Technology and McCormick and Company. After the opening bell, investors will get to know a consumer confidence index, which is expected to improve slightly last month. Thus, the quiet pre-market could be followed by a volatile session. In the currency market, the US dollar is extending its weakness. Its index slipped 203.50 intraday, having lost 0.3%. The instrument is likely to trade in the intraday corridor between 102.30 and 103.20. The US dollar lost its luster as a safe haven asset because investors shrugged off fears about the full-blown banking crisis and regained risk appetite. A recovery in the bank stocks encouraged the growth in the euro and the pound sterling and raised the greenback's confidence. Now, markets are positive about risky assets, so the US dollar is drifting lower, and the hearings in the US Senate could revise the market sentiment later. High-ranking officials of the US regulators are due to testify in front of the Congressional Committee on the crash of a Silicon Valley Bank and Signature Bank. Experts note that both lenders, especially Silicon Valley Bank, zoomed up their assets and eventually had a large number of insured deposits. Thus, funds vanished quickly as soon as the crack prompted up, Michael Barr said in his prepared remarks. He promised an impartial assessment of the supervision of Silicon Valley. He said that the responsibility for eliminating frauds is of the banking management, not on watchdogs. In their testimonies, the officials signaled that the rules for banks should be tightened. Apart from the greenback's weakness, the loonie owes its recovery to a rally of oil prices. Both benchmark rates spiked on a Monday due to bottlenecks in oil deliveries from Iraq. Today, futures on a Brent crude rose by 0.2% to trade at $76.28 a barrel. WTI climbed by 0.3%. Oil prices surged by more than 3% on Monday after Iraq had to halt exports of almost 450,000 barrels per day from the northern Kurdish region, following an arbitration decision that confirmed Baghdad's consent was needed to ship the oil. Cryptocurrencies suppressed intraday because the U.S. Commodity Futures Trading Commission filed a lawsuit against crypto exchange Binance and its CEO and founder. He is charged with illegal trading techniques and a fake conformity program. In this context, Bitcoin fell to 26,600 but managed to rebound to 27,000. Top altcoins gained 0.6 and 5.3% intraday. Binance native token and Litecoin shed 0.16% and 1.9% respectively. Investors are concerned that the lawsuit against Binance will lead to a crackdown on the crypto industry by regulators. Such prospects could dent the demand for crypto assets. On the other hand, there is a good news. MicroStrategy bought Bitcoin to the value of $150 million, and this move proves a growing interest among institutional investors in the crypto assets. Recently, billionaire Michael Saylor invested $150 million in the flagship crypto, and this aroused speculations about a bullish trend reversal. Indeed, crypto whales are entering the market. By and large, analysts are bullish about Bitcoin. As for the intraday outlook, the token consolidated in a narrow range between 26,900 and 27,100. If Bitcoin declines again below 26,900, it will retest 26,600 and sink lower to $25,700. The optimistic scenario suggests a climb to 28,200 and an attempt to settle at this level. And that's all for today. We keep monitoring the financial market situation. Subscribe to the channel and good luck in your trading. Beware of a high volatility today and see you online tomorrow.